today we have a lot of things to go through. Some of them quite exciting, some of them not so much, but important because they are happening in the background. And these are things that will have big impacts going forward. I'm just trying to see if everything here is good. Sound is good. Will it be the day today that I actually do this without? No, it's not gonna be the day without major issues. Oh boy. Hello. I hope now things are getting better. I hope now things are a bit more stable. And welcome back, guys, once again to Southern Wealth. Hope you're having a wonderful day. So, this week we've had quite a few developments. So last week we closed the week extremely ugly on the stock side. I did mention that we are still within this big channel for the S&P between 4,200, 4,600. Sometimes we go a bit below, sometimes we go a bit up. But it would be important, as we dropped way below 4,200, to actually start regaining that channel once again. Hello, Max. Thank you for being here. Very good. Hey, guys, don't forget, if you have some questions, if you have some comments, drop them. Don't forget to like and subscribe. That's the only thing that I ask, as you know. And let's kick it off going strong. So, again, this week would be extremely full, as it's been very full. We've been having about 1,400 earnings coming out. I mean, that's a massive amount. Things I think have been coming out somewhat better than people initially expected. Hello, Coin Hunt. Welcome. Things have actually been going on a bit better than expected. And I think that's been helping also on the stock front. But this week was all about, today in particular, was about ADP. So that is one of the job reports. I don't really like it that much because it comes many times complete opposite of the Friday report. Hello, SM Clay. Thank you for coming. And so I don't put too much credibility on that one, but of course it was all about the Fed meeting. And I've been saying this since June, which is, everybody's saying, oh, the Fed's going to cut in September, the Fed's going to cut in October, in November, blah, blah, blah. What I've been mentioning is, if they can, is hold rates where they are, so they have room to cut during a recession, but don't break anything. So meaning the best situation for the market, in my view, was higher for longer, which now everybody talks about it, but back in the day was not such a popular view. Higher for longer would be the best because further rate hikes will cause high selling, but rate cuts, at least in the short term, will create aggressive selling as well. Like, people are so enamored of the rate cutting, they actually forgot that every time that the Fed actually did some massive rate cuts, stocks tanked. Some of the worst days in Wall Street was when the Fed was cutting rates very aggressively. People completely forgot about it. And look, what they're saying is they think they've done enough, so they want to stop it here at this point. They are currently saying, oh yeah, we're not gonna further if we are not thinking about rate cuts, blah, blah, blah. That's all a bunch of BS. It's very simple. They are keeping on selling their own treasuries, trimming off that balance sheet, doing the QT, quantitative tightening. But take the example of the US Treasury. For the last 3 months of this year, they will issue almost $800 billion in debt. Now, let me put this in perspective for you. It took 210 years for the US to accumulate about $1 trillion in debt. It is taking them 3 months, sometimes a little bit, or 4 months, to accumulate the same amounts. That's how messed up the system is. And so, there's too many people selling treasuries, and my opinion, it's a matter of time before they need to reverse policy. unless something drops on on the good graces of the politicians in the US, and they actually start doing something about their deficits and debts, which I seriously doubt. Now, the job reports came out weaker. Look, job reports have actually been weaker for a long time, but people don't take the time to actually pay attention to anything, unfortunately, anymore. So if you actually look at the last jobs report, which was very strong, you would see that full-time jobs plummeted and part-time jobs increased dramatically. You also, if you would go a bit further in the report, you would see that the number of people getting second and third jobs was at an all-time high, or very close to an all-time high. Which means that because inflation is so high, real inflation is so high, that people need now 2 and 3 jobs to actually make ends meet what a few years ago one single job used to make it. That's what it means. But people cannot read that. They just read the headline, and very importantly, it doesn't matter what I think, it matters what the market participants think, because they will be the ones moving the market, not me. So this is, by the way, there was a very bullish indicator at the end of last week that most people missed. Number one, there was a very bearish one for gold, because Peter Schiff was predicting that gold would never go below 2000 again forever, which means it immediately went below 2000. And he was also calling out for a big Black Monday, in case people don't know what it is. Black Monday was in 1987 when the stock market dropped 20% in one single day. So basically, what he predicted happened the reverse. So he's trying to fight for the title of Reverse Oracle with Jim Cramer, and he's been proven to be a very strong contender. Now, what I think is going to happen over the course of 2024 is that something... Oh, by the way, sorry. Just to finish on the rate points, because I think this is important. And unfortunately, in the US, many times people don't pay attention to what's happening. The Eurozone inflation is coming but substantially lower than expected. And don't forget, these guys all talk to each other, okay? So they know very well that most likely the US will start following the same trends that you're seeing in the Eurozone. And so they are convinced, in my opinion, they're actually right about this, that inflation will subside going forward. Actually, and this is a very unpopular opinion, if they start cutting rates, that's actually deflationary. Every time I say this, people go, oh my God, what is this guy talking about? I thought that you need to raise rates to fight inflation. You see, rates is the cost of money, and it impacts the cost of financing, which means companies, instead of financing themselves at 3%, they are now financing themselves at 7 or 6. Who do you think pays that cost? You and me. The consumers pay that. So if they actually cut rates, that's a cost for companies that goes down. But the question becomes, oh no, but if we cut rates, people have access to credit, and they start using credit and spending a lot of money, buying houses, and everything goes up again. Say, no. Look at Japan. Japan has been doing this for 30 years. They barely have any inflation that is not driven by pure supply and demand issues that are happening in the country. The reason is actually quite simple. If the majority of your population is over-indebted, which is the case, when they walk into a bank and say, I would like a loan because interest rates are so cheap, I want loans, I want 10 credit cards, I want all of this, the bank will tell him, hell no, you're not going to get anything. Are you kidding me? Look at your credit score, this is terrible. Go out, go have fun someplace else. But if a person like Elon Musk, like Peter Schiff, like a very wealthy person that is in the top 20% of society, and they go there, hey guys, I would like a loan. No, because basically I get nothing for having money saved. Loans, I actually have some tax shields on it, and I'm going to buy assets with such loans. They will get it. So this is how we've been printing money for so long, and inflation doesn't seem to go up. Now I understand that inflation is understated, all of that, but for the amount of money printing we've been doing, we shouldn't have, oh, but this is 1%, should be 2. No, we should be having, if theory would work, we should be having 7 to 8 to 9% every single year for the past years, but you don't get it, and that is the reason why. What did you get? Well, you get asset price inflation. You get the S&P 500 go up 600% in 12 years. You get real estate prices going up. You get home unaffordability going up. You get a huge wealth gap between rich people and poor people. That's what you get for those policies. That's the price you pay. If you want to own a house, good luck. If you want to own stocks, you're going to pay a big price for them. That's the price you're paying. But not in the supermarket. Supermarket only happens if actually they start dropping money on people's hands, literally, like they've done, helicopter money, and tell them to go spend it. I mean, I know of people that were making 3 times more money with stimulus than with their actually salaries. And then if you tell them on top of everything to stop producing, then you're going to get inflation. But once again, it will eventually come down. So, what I think is going to happen going forward is they will try to hold rates as high as they can. I would really be surprised if they raise them again. I don't think they will. And I do think inflation will keep on moderating once again. I do still think we're going to see new all-time highs on the S&P, Dow Jones, and Nasdaq 100 by end of Q1 2024. And then they will come up with a good excuse to start printing money once again. By the way, guys, don't forget, if you have some comments, some questions, drop them in the chat. Don't forget to drop that like and subscribe as well, depending on the time you're joining. And if you're new here, I'll be trying to do these live streams once a week on Wednesdays. So what else do we have? We have job reports on Friday. I don't think that's going to have that major of an impact anymore. I mean, unless it's a very strong either beat or miss. I think that can move to some degree, but other than that, I do not expect it to happen. So let's go to the funny part. Okay, by the way, AMC up and down, meme stocks, some of them struggling, some of them doing well. As I mentioned, AMC, it's all about those upcoming Q3 results. They better be wonderful, the best we've ever seen before. Otherwise, it's going to be very bad for that company, I think, in the medium term. Because as soon as things turn sour a bit, we're gonna start seeing. I think we're gonna start seeing some fireworks to the downside once again. By the way, guys, let me know if you can hear me well, if all the systems are good. I hope so. I'm trying to have here something to give me a bit of extra control, but in case you guys don't, in case you guys miss something, let me know. Okay, so let's go to the funny part. Let's go to the crypto markets. I remember when I created my channel, right? I mean, crypto was all in the dirt. Nobody wanted to talk about it. The coins that I call the retirement bags, right? The pulse chain ecosystem was going down almost on a weekly basis. And I got a bit of a bit of hatred in the beginning on some of those topics, but it's good to see that actually people's enthusiasm and momentum is coming back. But the key is to stream, is to produce content when things are not easy. See, when things are easy, when we get to the bull market, like the full bull, let's say, then everyone wants to talk about it. Your parents talk about it. Everything. Then everybody wants to talk about it. But the key is to do the work, is to look at the what's happening. Thank you, Karim, by the way, for checking that. The trick is to be paying attention when nobody cares about it. Unfortunately, you see, there's something you need to understand about crypto. This happens in every market, but crypto in particular, because it's so aggressive, it moves so quick. The green candles, the green or the red candles, tell you what's going to be the narrative. That's it. Very importantly, it's not the narrative that creates the candle color. No, the candle color. Sorry, I'll come back to your question in a little bit, Arturo. So the candle color will tell you the narrative that's going to come. What I like to see when we are in the downtrend periods, because it can get really, really bad. Okay, and I think the key is to look at things that nobody's paying attention. Is the development occurring in the networks? Are people coming up with new projects to be launched closer to the end of the bear? Is there anything really materially changing versus the last cycle? And the worse the news get, the better it becomes. However, the worse it makes you feel when you actually spend your hard-earned money creating your positions. So I get it. Like, one thing is to go back in history and say, oh yeah, 2014, that was the big bear market, blah, blah, blah. Bitcoin went down. Then in 2015, you have the recovery year, blah, blah, blah. Then 2016, you have bull. 17, you have a huge bull. 18, bear. Yeah, one thing is to actually sitting down and look at this, and you do this in like 5 minutes. Say, okay, fine, I get it. The cycles repeat. They operate like this. That's one thing. But when you're actually seeing your portfolio going down, when you actually, are sitting there, and for a freaking 3 weeks, Bitcoin is within a $200 range, plus 0.5%, minus 0.5% going nowhere, and article after article after article, documentary saying how crap it is, these guys go bankrupt, those guys go bankrupt, blah, 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 all of these kind of things. And you sit down and you think, oh my God, this is terrible. Yeah, but that's part of living the cycle. As I mentioned before, crypto is about 3 years of suffering and 1 year of a lot of fun. And when you're having too much fun, that's probably a sign that the top is indeed coming. And what you need to be the most careful about is all the scammers that are already starting to pop out, because they will drive. The point is to leverage the popularity of a certain subject as long as they can, and basically completely, and then try to create a huge following so they can actually lose all their money on crypto, but they always can come back because, of course, they have the ad revenue, the super chats, paid groups, you name it. So that is something that people need to be careful about. So Arturo, let's go to your question. Just join the live stream. Do you think this rally will continue to the end of the year? If talking about stocks or crypto? I mean, if we talk about crypto, yes. I do think Bitcoin tends to outperform Ethereum at this year of the cycle at Q4. Ethereum tends to outperform in Q1. I have the feeling, look, this is pure Nostradamus kind of feeling stuff. I have no inside information. I don't know anything. I get the feeling that two things will happen this month of November. Number one, I think the SEC will drop charges against Richard Hart from the Pulse Chain ecosystem. Pulse Chain X, Pulse X, number one. Number two, I think we're going to get the Bitcoin ETF approval, the first one, this week. This month. Either the approval or a date for the final review before approval. Something like that you'll tell the market it's coming. If you're talking about stocks is a bit more tricky because stocks, it depends a lot on the bond market, because the bond market will tell you what stocks going to do. So if the bond market starts to fall aggressively, I don't see how stocks can go too far up from here. However, I do think what we just had was a bad month in October. October always tends to be a very tricky month because it's the month associated with crashes. So it's always a difficult one. I do think November, December should be good months for stocks. I think we should probably be approaching something like 4,500 in the S&P, around that. So Artur, in case you missed, what I mentioned is we've been traveling within these two ranges, 4,200, 4,600 on the S&P. Sometimes we go a bit below it, Sometimes we go a bit above it, but we don't stay there that long. So I do think November, December probably will be good months for stocks. But, I mean, this is not financial advice. This is just what I think. I can be completely wrong. But I do think there's always an extra layer of risk with stocks at the moment, which comes from, well, what's happening in the Middle East, for example, but also coming because of the bond market, which are, I'm not sure if you remember this, Arturo, but I mentioned at the time, when people were talking about the banking crisis and the commercial real estate disaster, said, no, look at China, look at government bonds. That's going to be the trigger for major sell-offs. Guess what? Chinese stocks are now below pre-pandemic levels, and TLT, so the 10 and 30-year bonds of the US, went down something like 30% or 25% since I made that comment. And what happened to commercial real estate? Nothing special. What happened to the banks? Nothing special. So, I do think it's more likely that next year we're going to have a recession, in my opinion. The basic reason for it is now all the top economists agree that a recession is impossible, and the Fed agrees that a recession is impossible, and many of the banks like Goldman Sachs, etc., think recession is impossible. So now I am keen to believe that the recession next year may be actually coming based on that all of these parties being in agreement. And by the way, guys, thank you. I see that we have about 15 people on the live stream. If you have some questions for me, feel free to drop them, of course. If you do like the content, please consider dropping that like and subscribe. So continue with the crypto updates. A lot of people are actually not paying attention to this, but they should. There's been about $1.5 billion going through some of the big exchanges. You start to see transactions in the background for Bitcoin of $1.2 billion. So clearly, a lot of people are preparing for something. And it's going to be very, and in case people don't understand the writing on the wall, just check these big wallets, because they'll tell you, because they already have specific information that you don't. And this kind of activity tends to happen before bull market. One thing that is important, this is what I'm trying to do, I think it's important, I do expect to see more random pumps. What do I mean by that? All of a sudden, you look at something and the whole thing pumps like 70% in 2 days and you don't know what happened. But then it still retraces, but it now only retraces 20% when it used to retrace 40 or 50. This is going to start happening, this is when you start entering into the bull, and this is the time when a lot of people get left behind. I mean, that's yeah, I mean, he did. Look, I've mentioned this actually a bit, Max. I did mention this a bit in the beginning of the stream, which is, I was always of the opinion, back in July or something, when everybody was predicting that by October we'd be cutting rates, all of this kind of stuff, I said the most bullish scenario would be higher for longer. And this is what the Fed is trying to do, because they need to leave room to be able to cut if there's a recession. So, and by the way, the days that you cut are actually very down days for the stock market and other markets in general. Like, people get this completely upside down. And I think what they're trying to do is to really get away from this game of money printing. But in my opinion, because of what the Treasury does, they will eventually need to come back to playing the money printing game once again. Let's going back to crypto. We're starting to see the big movements on the big wallets. We're starting to see altcoins run, Solana, Chainlink, Pulse Chain, PulseX. So you're starting to see the altcoins also moving. Today we had a little attack from Elizabeth Warren against self-custody of assets. I do seriously doubt that she even knows that they are just a bunch of words put together, 12 to 24, depending on your level of security. I don't think they actually know what that means. But what she wants is what a typical leftist, extreme leftist like her wants, which is control and domination over people. That's all that she cares about. So that's a perfect example of this is always something that happens with the. Sorry, I got a bit distracted with the chat. This is what actually happens with people on that side of the spectrum, which is they pretend to be for the people. They're not. They're here for control. That's all they care about. Don't make the mistake that thinking about that these people care two things about you. They don't. So the better you try to figure out a way to improve your life and not be dependent at all by decisions that these people make, that's the best position you can be. So, in summary, we are starting to run up quite nicely. Bitcoin tends to outperform in quarter 4. I think Ethereum will probably outperform January, February. Altcoins follow because they are liquidity linked to Ethereum more than with Bitcoin. I already see billions of dollars moving on the background, which tells me something big is about to happen. And that's one of the reasons why I got this funny feeling about November. Artur is asking me, so in the scenario that ETF approval happens sometimes this month, do you think that would be the super cycle scenario? Okay, so that depends a little bit, and this actually ties in well with something I wanted to say. The best estimates that I've seen from some of reliable insiders in the industry is that between $6 and $15 trillion could come into the industry. Now, $6 trillion is double our last bull market at the top. So at the top of our last bull in 2021, we got to $3 trillion. $6 trillion will be double that. I think the scenario that 15 trillion comes in, anything between 10 and 15 trillion, in my opinion, can create what I called the super cycle. Now, what I think is going to happen is that as soon as the ETF is approved, it's going to be very bullish for Bitcoin, but also for Ethereum, because it pops up the question, oh, then the Ethereum one is the next. And then I think every time a new ETF is approved, it will be positive, but less positive than the one before. This happens constantly with any subject. You remember when the news during the pandemic were coming out, every news was terrible, dramatic, stocks would sell off brutally, blah, blah, blah. But after 5 or 6 weeks of that, news wouldn't even move the price anymore. That's my point. Every time you see the same thing, less and less impact. Number 2, what I think is going to happen is the day of the halving and the day of the launch of the ETF will be extremely bearish that day. I think there's going to be a big sell-off event right after those two things came out. That is what I think is going to happen. And then the question becomes, will we fall too much to the point of, okay, this was the top, that's it, we're finished, blah, blah, blah. Difficult to say at this stage. I don't think so. I actually think what I would like to see is actually the ETF coming out as soon as possible to try to do the least harm possible to the cycle. I think if it would come out something like October 2024, I think we would risk it, cutting the cycle short, to be honest. I need to be honest about it. I think that would cut it short, in my opinion. If it comes in the first quarter, I think we have a chance to still go further. And when I say the super cycle, look, the crypto returns are diminishing. I think this is clear to everyone, right? There was a time where Bitcoin would go up 600-fold. Now it barely goes up 3-fold from one cycle to the other. So the gains are diminishing. The probability of you finding the next Pepe is lower and lower. And what I call the super cycle is you really have an old school kind of movement, talking about Bitcoin going 300K or above, things like that. And then everything else pumps even harder. But the next cycle, we're going to start to have returns better than the stock market, but not so much far away anymore. That's the super cycle theory. Now, what I've done is I position myself in a way that I'm prepared for any scenario. Bearish case, base case, super cycle case. I win in any case. That's what I'm trying to do here. And I think the super cycle will depend to some degree on the timing of the launch and how far down we go after the launch. And those things are a bit shorter term in nature, and depends how high we run up. Because I think if the ETF comes out and Bitcoin is like 50K, I do think we're still going to have the run up to the new all-time highs later in the year. And depending on how much money is coming in, is it 6 trillion, 15 trillion, 12 trillion, 20 trillion, 10 trillion, I don't know. Depending on the amount of money coming in, you do open the potential for super cycles. Now, you have little things that help. The SEC dropping cases, the SEC giving up on going after the XRP founders, the SEC losing to Coinbase, to Grayscale Bitcoin Trust, but all of these things are positives. So, but to make a final decision on this, you need some shorter term points. Do you think meme coins are a good play right now? Look, man, meme coins, you're playing a game where a lot of people lose and a few people win. For every Pepe, there has been 20,000 Pepes that went to zero. So in my opinion, it's a bit of a lottery kind of play. Now, I also have some lottery plays in my portfolio, something that I know, small money that if I catch a Pepe, I'll do very, very well. If I lose it, I'll do very, very well in any case. But if it goes to zero, I also don't mind. See what I mean? But meme coins, I mean, look, you're playing a very dangerous game. I prefer products with, cryptos with product market fit, good founders, audited, with a purpose, things that, in my opinion, those make more sense. But can they run like crazy? Sure. I mean, meme coins can run like crazy, but you need to understand, we have certain days that 30 coins are launched. 30 per day, some cases. So picking that Pepe, I mean, I think at the moment you have better luck playing the lottery, but I cannot tell you what to do, man. If you want to go all in meme coins, be my guest. I don't give you financial advice, I can just give you my honest opinion. And one of the things that I like is actually Pulse Chain, Pulse X, that is real DeFi, you know? And what you see with Uniswap, having behind the doors meetings, trying to introduce KYC into the system. I mean, the opposite of why crypto was invented. That, in my opinion, projects where VCs, there was a person who asked me this week about GRT. I mean, just type GRT, crypto, ICO, and you see the level of private sales to venture capital firms. By the time that you're up 10x, you, the retail investor, they're already up 100 and 200x. So they will always dump on you. That's, in my opinion, I mean, you're playing a very dangerous game with that. So that's what I mean by fake DeFi. DeFi, things that are portrayed as DeFi, but they're filled with VC firms, they are filled with influencers that got a bunch of money in private allocations. I mean, there was this guy who was pumping Celsius to his following when Celsius was about to go bankrupt, and he was withdrawing at the same time. You have people pumping garbage cryptos, and some of their wallets were doxed, were identified, and you could see them as soon as those coins launched. They sold at a massive profit because they had private allocations. They were paid by the teams running those projects to pump the coins on their following, and they were selling them off on the first launch, and they were selling them off for $300,000, $450,000, $200,000. This space is filled with these guys. That's why I don't sell you anything, because I'm not depending on YouTube to survive. This is not my life. I'm doing this as a hobby, and I wanted to broadcast my journey to the world into what I expect to be financial independence. That's why I don't have the behaviors that you see on these guys. Think about the things I've been predicting. I mean, I've been predicting a few things here and there since June or so. I mean, I've been accurate on like more than 90%. And I don't use it to go, by the way, did you see I was right? Join my Patreon. Here's my course, join my Discord, buy my stuff. No, I don't do any of that. Sorry, Artur, I missed your call. I missed your question. So if the ETF was rejected, would it be bad for the cycle? Yes, I think so. Look, the ETF is, you need to understand, like many of us are crypto savvies, like things like store your own crypto, self-custody, altcoins in general, the difference between Ethereum to Binance Smart Chain to Polygon to Solana to Cardano to Pulse Chain. Most people have no clue about this. Most people want to enter a website, buy something, hold it, expect it to go up. But then they also see what happened with FTX and Celsius and BlockFi and Voyager and all these names. And then they think, oh, but I really don't want to hold them in that because those things go bankrupt and go to zero. Oh, but there's an ETF from BlackRock, one of the top 3 most powerful companies on the planet. And they will run due diligence with their custodians, and they will be always on top of them and auditing them and doing all of that. People in the legacy world want stuff like that. And then it's just a matter. Then people have huge theories about, no, it's just a matter of supply and demand. You're going to have more supply of dollars and euros and yens coming into the system to buy the same crypto that you have, which should push the price up, in my opinion. Of course, I'm not a magician. I don't see the future. It's just a matter of convenience of what people are used to in the legacy world. We need to sometimes understand that what we take for granted and as usual, it's not always the case. And the reason why I think the ETF is going to be approved is because there was a live interview to Gary Gensler, and he basically was explaining how the ETF is going to work. He mentioned the word security to throw his, oh, look, I also participated in this, right? This little winning parade. But the way he was talking is someone who's already approved it in his mind and is already telling people how it's going to work. You don't do that. And by the way, then you see them dropping lawsuits, them not going out again with the Grayscale Bitcoin Trust, for example. So you start to see a lot of signs that things will go better in the future. So that was my point. By the way, guys, if you're just joining, don't forget, drop that like and subscribe. It's very, very helpful. I hope, I'm here for almost 40 minutes, so I think I'm bringing it up to an end. If you guys have some final questions, drop it in the chat. I would like to mention just a few things. I would like to see, what I would like to see going forward, I would like to see Pulse Chain, PulseX taking out last week's highs and keep on the pump. I think we're going to start seeing increasingly more random pumps across different coins, in the sense that, you're falling asleep, wake up in the morning, something is up 30% and you don't really understand what happened. But in the past, those things used to sell off 30%, you'd go up 30%, sell off 25%, and basically it'd be in the same position. I think what's going to happen is things are going to start running 80, 100%, correcting 25%, and then a lot of the bears will be waiting for it to drop further so they can buy, and it won't and it won't stop there. Meaning 25% and we go up again, which means next time we sell off, a lot of people say, oh, last time it sold off 25% and then it went straight up. So this time, if it drops 20%, I'm going to buy it. So what I'm trying to say is that the pumps will get more elongated and the dumps will be lower and lower in nature as we move into the cycle. Once again, this is what I believe. I can again be completely wrong, but I don't think so. There's still a lot of people with the theory of a double bottom. Look, I've said this before. Could we have had a double bottom? Yes. Do we always have a double bottom? No, about 50% of the time. I think people are linking it to March 2020 when we were already theoretically in the bull cycle, but we still had that big dump during the pandemic going around. So I think that's what people were basically, that's why people are so, oh, and look, we can still get it. There's no question about it. But it's just, look, I think it's pretty obvious during the evening. I think there's going to be a big sell-off. In my opinion, I think there's no reason why it shouldn't. If we are at above 45,000, I really don't think we're going to, go back to 20,000. Maybe we can go back to somewhere between 25, 30, but I don't expect below that. Next resistance on Bitcoin. Okay, there are two big numbers that I'm looking at like a hawk. I'm not so concerned about 36,500 short resistance, but no, I'm looking at a bit bigger scale. Okay, max. So 42,000 is a very important number because that means the average person will become profitable on Bitcoin. A lot of people are still very traumatized from the bear market. So you're gonna have a lot of people as soon as they break even, that's it, I'm out, I wanna get out, I don't want this stress anymore, I'm finished. Because I told you, crypto is 1 year fun, 3 years pain. Most people don't like that, so they get out. They don't do their homework, so if they see break-even price, out. So I do think 42,000 will be a good number to look. If we blow out past that, very good news. Second number is for the next 60 to 90 days, that means November, December, late December and January, we should cross 45K on Bitcoin. Why? Because that would put us on target with previous cycles. So I do think a lot of people are looking at those two numbers in particular, and those will be the most important numbers, at least in the shorter tenor. But as I mentioned to you before, I'll say this again, my eyes are on 2025. Altcoins tend to top 12 to 18 months after the halving. So as we approach this, as we move forward in the cycle, then I need to take my longer dated kind of view and tailor make it to the shorter time frames and look for specific signs that we may be getting into a top. So guys, if you don't have any further questions, thank you very much for attending today. Thank you very much for the comments, it's very good. Don't forget, guys, if you came at the end, like and subscribe. Really appreciate your support. Once again, I'll be trying to do this at least every Wednesday. If something really material happens, I may drop one in the weekend or one other in other days. But so far, things have been happening as we expected. Things are taking on with the cycle, and I do think this cycle can be very interesting. Particularly also, it's going to be the first cycle in which we have higher interest rates, which has never happened before. Will it be bullish? Will it matter? Will it not matter? Will it be bearish? Who knows? Is anybody guess? But we are here to go through the cycle safely. By the way, guys, be very careful with these guys pumping coins on YouTube every week. Many of them are pre-sales and things like that. These guys get private allocations and they dump on their following over and over again. And when they get caught, they block people on Twitter and on social media. So be very careful with that, guys. With that said, thank you very much. If you missed the live stream, please watch it later. If you guys have further questions to me, also drop them later, and I'll catch you in the next one. Thank you very much. Of course, Karim, always very important information, particularly those big wallets on Bitcoin. You see the $1.5 billion going through exchanges. You see trades with 1.2 billion bitcoins going, $1.2 billion in Bitcoin going around. Nobody pays attention. We'll see if I'm right about November, but I don't count it as a serious prediction. I make it a bit as a joke. If I'm wrong, I'm wrong. We'll see if it happens. Thank you very much, guys. I'll catch you.